We have a bunch of folks joining us, so we're going to give it a few minutes. For those of you that have questions, you can use the Q&A box that's provided to you on Zoom. We also will be streaming this on YouTube and taking questions from there as well. For those that are joining us by phone, you can always email us. This is Natalia Abrams with Student Debt Crisis, and you can email us at info@studentdebtcrisis.org. And we will take time throughout the workshop or clinic, to go over your questions and hopefully provide you answers and places to turn to.
All right. Thank you, everyone, for joining today. My name is Cody Hunanian. I'm the program director here at Student Debt Crisis. As Natalia mentioned, we are going to get started with the workshop now that more folks have been able to join in. Just another reminder, we do have the Q&A box at the bottom of your screen. You can go there to and ask any questions. We are here to make sure that we can answer as many questions as possible. We should hopefully touch on a lot of these topics during the workshop. We will answer questions in the box, and we will stop for Q&A throughout the workshop to address as many questions as possible during the discussion. So with that, I think we can get started, and I'm going to pass it off to Sam Sang at NextGen to introduce everyone on the call and to get us started.
Thanks for that, Cody. Good morning, everyone, and welcome to Student Loan Borrower Outreach Clinic today. I'm Samantha Sang with NextGen Policy, and we're happy to partner with Student Debt Crisis and Savvy today to bring you information and resources with your student loan debt. And so moving on to some of the expert speakers we have with us today. First, I'd like to welcome you to Natalia Abrams from Student Debt Crisis. Natalia, are you still there with us?
Yes, thank you, Sam. And thank you so much, or Samantha, excuse me. And thank you so much for joining us on NextGen Policy for this workshop. As Samantha said, I'm Natalia Abrams and the Executive Director here at Student Debt Crisis, where we aim to try to completely change the way we pay for higher education, for ourselves and for the next generation. And we also want to provide you with actual ways to repay back your debt or be in the right repayment solution while we figure out the next policy solution. So thank you all so much for joining us.
Great, thanks, Natalia. And we also have Lindsay Clark from Savvy. Lindsay, are you on?
Hi, Samantha. Yes, I am. And thanks so much for having me. And good morning to everyone, or good afternoon, depending upon where you are. My name is Lindsay Clark. I'm Director of External Affairs at Savvy. Just a quick bit about us. We are a student loan social impact tech startup founded by experts and advocates and policy advisors. And we are sort of here to help navigate the complicated repayment and forgiveness process. So I'm excited to be here to talk about a free tool we've developed to help borrowers in need, and looking forward to being able to answer any of your questions today. Back to you, Samantha.
Awesome, thanks, Lindsay. And then also from Student Debt Crisis, we have Cody Hunanian. Cody, are you on?
I am on. I already introduced myself. My name is Cody Hunanian. I am the program director here at Student Debt Crisis, but I'm also a student loan borrower, like many of the folks on the call today. So I have personally dealt with these repayment obstacles with the many repayment programs. And really proud of the workshops that everyone on the call here today have hosted, because I know personally that a little bit of information really goes a long way for borrowers who need help affording their loans. So I'm really happy to be here. And thanks for giving me the opportunity to introduce myself, Samantha.
Of course, thanks, Cody. We also have other folks on the line. I want to see if they can say a quick hi from Student Debt Crisis, Dylan Fox.
Hello, everybody here. Happy to help manage the slides. I also helped to put together some of the content you'll see later on in the slideshow. So happy to be here, happy to help out.
Happy to have you here, Dylan. And we also have Ian Kuhn from Savvy.
Hey everyone, this is Ian. I will be answering questions live in chat and Q&A alongside Aitana or Spencer from our Savvy team you might see as well. So definitely any questions you have, put them in the Q&A box and we'll try and get to you during and after today's webinar.
Thanks, Ian. And really quickly, I'm Samantha Sang, a policy advisor at Next Gen Policy. We're a nonprofit political advocacy organization based in California, dedicated to supporting and advocating for progressive policy, legislative, and programmatic issues on a wide range of issues and policies, but specifically addressing the student debt crisis is just one of the major work that we are focusing on in the next coming years. And so thanks again to all our speakers for joining us today and for all of you on the phone or online tuning in. Thanks for taking time out of your busy schedules for today's clinic. So moving on, a little bit about what we're going to go into today. This is part of the Student Loan Borrower Outreach Program, and we're going to go over some of the basics of student loans and then get into affordable repayment options, including student loan forgiveness programs. And at the end, we'll share a free tool to help you understand your options and enroll in some programs. Also, please know that there will be time to do some Q&A throughout the workshop or utilize the Q&A box if you're on Zoom here to get any specific questions you may have. And hopefully we'll get to as many questions as we can today. And so moving on to a little bit about the Student Loan Borrower Outreach Program. This is a project organized by the groups on this call, and we are developing and testing free resources for student loan borrowers, including this free workshop. And so we're going to be mentioning a lot of resources today, and they can be found online, and they're free to access at the Student Loan Borrower Outreach Program's website. I'll just read that off real quickly. You can visit, it's at bit.ly/borrower resources. That's bit.ly/borrower resources. We'll put that up in the chat box as well. And so as we move forward, just a little bit about, before we move forward with today's workshop, we do want to start off with recognizing student loan debt is a significant burden, and that unfortunately or fortunately, you're not alone. So if you're with us today, there's lots of impacted communities. Half of Black borrowers are behind on their loans. 31% of Latinx borrowers don't complete on their student loans. 2/3 of the student debt is owned by women alone, and 56% more student debt is held by Black women. So this is a crisis that is widespread and crosses into many different communities as well. These are just some of the stats here, but we also know that older borrowers, or those 55 years or older, are one of the fastest growing group of borrowers. This problem impacts everyone who, like, from veterans to teachers and those who've been out in the workforce for years. So again, this is a huge problem that we're hopefully going to be giving you some resources today to help you figure out. And so moving on, we know that the burden of student loan debt has a domino effect, and it isn't just an issue just about having debt. A lot of times overwhelming debt, this is also an economic crisis, it's a civil rights issue, and will have a bigger societal impact as those with this kind of debt struggle with the day-to-day living expenses. And so student debt has a negative impact on wealth. On average, an average 30-year-old borrower has $8,000 less in wealth because of student debt, and Black borrowers are unfortunately $10,000 in the red. Student debt also prevents buying a car or home. More than half of first-time homeowners found saving for a down payment difficult because of student debt itself. And especially now during COVID-19, student debt is another financial stressor. And so we still continue to see Latinx borrowers are more prone to unemployment, especially during times of economic crisis like the one that we are in today. And then this is also National Hispanic Heritage Month. I myself am a proud daughter of immigrants, and I know my family and my friends have struggled to pay for college and student loans. And so recognition of this month that we're in, we also do want to touch on how student debt falls disproportionately more on some. And so over 60% of Latinx students who graduated with a bachelor's degree from a public school take on student debt. We also know that less than 10% of those without documentation go on to attend college after graduating from high school, and $28,000 less, there's $28,000 less on average for wealth for a young Latinx household with student debt compared to a household that is debt-free. So again, all of us here, we're not alone. There are millions of people across the country, and in California, nearly 4 million alone. And so we're going to be moving on to the basics of student loans so we can get to your questions and hopefully help you all figure out the best repayment options for you. So we're going to keep going on to the differences between federal and private loans. And so on a much broader level, there are two types of loans. You can see them here on the slide. And so federal loans are need-based. They can be subsidized or unsubsidized. And generally, yes, they have a fixed interest rate. They do have repayment options and plans. There's student loan forgiveness, hardship deferment, and if you default on a loan, you have a rehabilitation option. Versus private student loans are credit history based. The interest begins immediately. There's variable interest. There's no repayment plans, no hardship deferment. And if you're in default, you can go into some negotiation with your private student loan servicer. And with that, we're going to go on to some of the differences between federal and private student loan servicers. It's totally common too that many borrowers have a mix of federal and private loans. So here are some names of of student loan servicers to help you recognize maybe if you have a federal or private loan servicer. So federal servicers are like Nelnet, Navient, Great Lakes. Some of the names here under the private servicers are Sallie Mae, Wells Fargo, SoFi. And please note that some servicers also provide both federal and private loans, like Navient. And so going into a little bit more about who your federal loan servicers are. They are contracted by the Department of Education to handle or service your student loan. And so technically their jobs are paid for by taxpayer dollars to provide services to those with student loans and walk you through the lifetime of your loan. And that includes helping you apply payments. They process your payments and distribute it to your accounts. Federal student loan servicers also are supposed to help you enroll in income-driven repayment plans, deferment, forbearance, and loan forgiveness. And they are supposed to be sending you timely communications on your statements, bills, and other important messages about your loans. And so moving on about the different types of loans. There are 3 types of federal loans. You can have a direct federal loan, a Perkins loan, or Federal Family Education Loan, or FFEL. Direct loans are the loans given by the government in which the money is funded directly by the federal government as well. And so nearly all newer federal student loans are direct loans, and they qualify for the most repayment programs and loan forgiveness options. Perkins loans are the types of federal loans that you are awarded by your university or education institution directly. The Federal Family Education Loans, or FFEL loans, are what most older federal loans were. These were given by the government, but the money came from private banks. So if you have one of these older loans, you qualify for some, but probably fewer federal programs. And please keep in mind, you may also have a mix of some of these loans. And so we're going to go into how you can find out some information about your federal student loan. So the first thing you want to do is to make sure you go to studentaid.gov. This is the official federal government website where you should create an account or log in if you already have an account there. And once you do that, you'll be able to find information in the federal database about all the federal loans that you will hold. So all your federal loans will show up here on this account. And so you have paperwork or other documentation from another company that isn't showing up here. Chances are you also have a private student loan, but make sure that you check out studentaid.gov, as there are many sites that imitate the federal website to gain access to your personal information. Another good resource that we do want to let you know that you can get some trusted information from, you can visit borrowers.buysavvy.com. Again, another good resource is borrowers.buy, that's B-Y, savvy.com. So check out these two sources to get some information about your federal loans and your loans in general, but we'll go into next about finding information about your private student loans. So again, go to studentaid.gov. That's the official federal website to get information about your federal loans. And if you know you have another loan and it's not showing up there, chances are that you likely have a private student loan. You can also check to see if you have a private student loan. If you remember, most private student loans require a cosigner, while federal loans do not. So if you had a cosigner, chances are you might have a private student loan. You can also review your credit report to confirm your loans are all, as all loans are reported there. And once you do get a handle on you have federal loans or private loans, then for your private loans to get the most updated information, you'll want to stay on top of that account by contacting your lender, servicer, or debt collector directly. So that was a quick run through on the basics of student loans. We'll be moving on to the next section of today's workshop on repayment options with Natalia. Natalia, are you on?
Yes, thank you so much, Samantha. And thank you, it's really important resources that we're sharing with you all. And for folks that are on the phone, we will be sending a follow-up email that will include this workshop and the resources that we discussed if you weren't able to write it down. And we are providing links for those that are joining us via Zoom in the chat, so you can go directly to the websites that are mentioned. So I'm going to go over, what's been going on for student loan borrowers in terms of COVID-related updates and how the CARES Act or the executive memo that came out of the White House, how that impacts borrowers like all of us. So moving on. So recently we saw through Congress, right after coronavirus impacted so many of us, that payments for most student loans have been suspended and interest has been waived or at 0%. And in the CARES Act, that was till September 30th, but not to worry, that has been extended via the executive action. So right now for federal student loan borrowers, payments are suspended. We have 0% interest. Unfortunately, 9 million commercially held SFEL loans, those older loans Samantha was talking about, along with Perkins loans from your school and private loans were not included. So we know that many borrowers, through no fault of their own, it was not your choice whether you had a commercially held FFEL loan or not, or even to know those terms. So we are still fighting very hard to have some sort of parity and some sort of balance with that, but as it stands right now, they are excluded. The good news is the current suspension time, if you are working in a public service job or if you are on a repayment program, your payments will count. And suspended payments are treated as on-time payments for credit reports as well. Moving on. In addition, for those defaulted borrowers, collections have been halted for 6 months, and that also has been extended, including wage garnishment and Social Security withholdings. Again, don't pay attention to the dates here. This was for the CARES Act. We will move on to the executive action. And one note is that students who were forced to withdraw from school from the last semester, they can get credited on their direct loan for that time. So after the Congress passed the CARES Act, then we had an executive action within, I believe, the last month. And that extends the payment until December 31st. So that's an important thing to know. For the majority of federal student loan borrowers, you probably already know you have not been making payments on your student loans, or you do not need to, and you are not paying interest currently at this time. This will last until December 31st. That means starting January 1st, or whenever your payment is due, is when you need to start making your payments again. That is where it stands right now on Thursday, September 24th. In addition, this executive action basically extended all of the parts of CARES Act. So it will also count towards public service loan forgiveness. It will count towards loan rehabilitation programs. We know that they have pushed back certifying for income-driven repayment plans. However, you can still sign up for income-driven repayment plans if you're just learning about them today, and continue to do so during this time. Also, good news for most defaulted borrowers, involuntary collection and debt collection has been paused. Moving on. So we're going to go over some of just the basic federal loan repayment options before we get into the plans that are available, especially for those who have lost their jobs or income has changed. So we can move forward with what has always existed pre and post coronavirus. So when you graduate from school, most of us are put on a 6-month deferment. We don't pay our loans right away, and then we go into a 10-year standard repayment plan. Standard is there in quotes because so many borrowers that we work with and know, they take 10 or 15, 20, 30 years or more or never to pay off their student loan debt. So we know that that's a short amount of time to pay back a lot of money, considering the cost of college has become outrageous. So you were put into this 10-year plan, and then moving forward, you could be, offered these alternative options, which were typically offered for those of us that have the older FFEL loans, the federal family education loans. You would be offered to do, an extended repayment, paying over a lower payments over a longer period of time, having graduated repayments where your payments would gradually increase, or extended graduate repayment, low payments over a very long period of time. We put these here just so you know, these payments don't count towards public service loan forgiveness. So if that is something you're looking to do, and you're in one of these programs, that's something to consider. Many folks now choose the options that Cody will go over with you shortly, which are the newer repayment programs. Moving on. And also, this is just to keep in mind these temporary hardships of deferment and forbearance. This is entirely different than the current pause that you have due to COVID-19. But typically, if you called your loan servicer, you called up Navient or Great Lakes, and you said you were struggling to make your monthly payments, they would offer you a temporary forbearance for struggling borrowers. And often, unless it's a short-term situation, again, there are repayment programs that are better than the temporary hardships of forbearance or deferment. Deferment is a little different, especially for borrowers that had subsidized loans, meaning the government pays the interest. That 6-month period of time is pretty typical. After you graduate, you don't pay your loans. We know there are a lot of new students graduating now, or that did graduate 6 months ago and are just starting to pay back. And I'm sure you're curious, like the rest of us, what will transpire after January 1st. Moving on. So we want to quickly just go over, for those that may have been in federal loan default before this happened, or what can happen, and why we want to talk to you about all of these available repayment programs and make sure that you get into the right situation for you before this January 1st restart date with payments. So for those, default, happens when you are 270 days or 9 months past due. Technically, after the first day you don't pay, you're delinquent. After 90 days, that's when things, start to get a little bit sticky because it is reported on your credit. And then after 270 days or 9 months, you do fall into loan default. So these are all for federal loans, to clarify for those folks on the phone. Moving on. So if you have defaulted, there is default loan rehabilitation. Again, it's still being done during the pause on your loan payments, but if you were in default before, or if you're worried about what's going to happen when you need to start repaying your loans, there is, an option. This is for federal loans only. You need to be in good, you need to do this in order to get into good standing and get into more generous repayment programs. You have to make 9 payments over 10 months. They allow you to do what's called fair and reasonable payments. So for this, they will go over your finances, and often it can be as low as $5 per month in order to get back into good standing. You can only do this once. So if you've completed this before, then you're not able to, but if you've attempted and not completed it, then you're still able to go through the default loan rehabilitation program. Moving on. Another thing that many folks do with their federal student loans, and you definitely want to contact a professional or go to the like Savvy or go to studentaid.gov to look into this, but it's federal loan consolidation. We all know that many folks have many loans, 6, 8, 10 loans. I've heard crazy numbers. So often people will consolidate their loans into one on their federal loans. Another reason you may consolidate is if you have an older federal family education loan, those FFEL loans, you may want to consolidate into the newer direct loan in order to take advantage of the more generous repayment programs or public service loan forgiveness. Just like we mentioned before with default rehabilitation, you can only consolidate once into the direct loan program. And as I mentioned, make sure that you contact either your loan servicer, Savvy, or the Department of Education to do a federal loan consolidation. And moving on. So with that, I'm going to pass it to Cody.
All right, thank you so
Do we
much.
have you on the line? Great, thank you.
Yeah, before we get started with this next piece, which I think is really critical to a lot of the people on the call today who have been impacted, had their income impacted by the COVID pandemic. I just want to take a pause real quick and take a moment to address any of the questions that I see coming through, because there have been a lot of them that are great so far. So let's see here. Question almost every workshop. Betty wanted to know if the information that we are sharing today applies to parents with federal student loans that paid for their child's education. Lindsay, maybe that's something that you can address. I know your team speaks with both students, student loan borrowers, and presumably a lot of parents who need help enrolling in programs as well.
Yeah, definitely, Cody. And actually, people age 50 plus are the fastest growing demographic of student loan borrowers. So you're definitely not alone. But yes, if you are a parent who's taken out perhaps a loan, on behalf of your child, but in your name as the parent, that's what's known as a Parent Plus loan. And you can take advantage of these programs. In order to be eligible for some things that we're going to talk about, like income-driven repayment and forgiveness, you would need to consolidate that loan. but we can discuss that in more detail in the coming slides. But you are able to take advantage of this, and you are able to take out loans, like I said, on behalf of your child, but in your name as a parent.
Thank you so much, Lindsay. I know we get a lot of parents on the call who are confused about the situation that they are in. Samantha mentioned she was a proud child of immigrants. I too come from an immigrant family, that first generation college student. So my family did not know about these options. My parents helped pay for my education. So this is something I know I faced in my home as well. Let's see here. I am getting a lot of questions actually. Just to throw it back to you, Lindsay, because I know you'll talk about your tool later, but a lot of folks are asking me if they can trust companies that are reaching out to them to pay for services that we've already talked about on the call. And I know for this project, you're offering a tool for free. I guess what are these businesses? What does your tool do? And what should these folks think about it?
And actually,
Sure.
Cody, if I can just hop in real quick. Yeah. Just to say that at Student Debt Crisis, it's something that we've really fought is what we call debt consolidation, debt relief companies. That's why I was saying be very careful. But, we only work with folks, or only want to bring folks that we completely trust. So, companies going to the Department of Education is safe, and the great work that they do at Savvy, is a company that it's the only company that we work with to provide actually getting through these programs and signing up for these programs is working with Savvy. So with that, Lindsay, I'd love to hear, what you do and know that you work with us to combat those awful consolidation companies.
Yeah, thanks, Natalia. And absolutely. And so, at Savvy, we really try to focus on helping people to navigate the federal system and optimize whether it's their repayment or if they're potentially eligible, forgiveness. And we are all borrowers ourselves, but we come from the policy and advocacy world. We saw how sort of broken the system was, and so developed a technology system to help people to navigate this whole process better. And the tools that we're going to talk to you about later on today, we are offering completely for free to you all. So there is absolutely no fee involved. We're not charging you anything to use our services and our technologies. So that's really important. I want to make sure that I reiterate that. But as far as other companies out there, I'm a student loan borrower. I get these sort of notices or even calls all the time. I would just say to be aware of anything that, advertises a sort of a false sense of urgency, talking about immediate loan forgiveness or, deadline approaching or act now. Anything that sounds, too good to be true often is. And so they will sort of do a bait and switch and try to make you think that there is something that you need to do and it involves them, and when really that's not the case. So a lot of these sort of, scam companies or loan consolidation companies will charge you upfront fees. They will claim to be the Department of Education. They will make promises about loan forgiveness. So those are things that you really want to be aware of. And at Savvy, our sort of perspective is, first and foremost, you need to be educated as a borrower, right? And that's the first way you can sort of protect yourself. You're your own best advocate. And so that's why we're here doing this webinar and this clinic, to make sure that if you know what your options are and what's available, then you can protect yourself from falling prey to these scams. So hopefully that was helpful. And I'm going to talk a bit more about Savvy and the free tool we developed for all of you to use later on. But that should give you some insight for now.
Yeah, thank you so much, Lindsay. This is very helpful, the tool that you're creating. And there is a lot of misinformation out there, and I know your team's dedicated the way we are to helping borrowers. I've got one more question that I think is a good segue into the topic we're about to discuss. So I'll go ahead and address this one. But I had a question from Faiza, and Faiza wanted to know if they took advantage of the forbearance option that Natalia discussed. And if you all remember, that is the opportunity to pause your payments. Is there a cap to how long you can do that? And there is, Faiza. When it comes to deferment and forbearance options, we consider these to a certain extent emergency options, because they are limited in how long you can utilize these choices. That's why this next section is going to be really critical to people who are facing income disruption for extended periods of time, or just can frankly not afford their student loan payments and don't expect to do so soon. That's going to be these income-driven repayment plans that you can enroll in every single year. And I'm going to go into details now. So if that's something that folks are interested in, this section's really for you.
And hey, Cody, just to add in, to clarify for folks on the phone, you know, this is still entirely different than the current pause that everyone, you know, if you are one of those 35 million plus federal student loans that are on pause, you do not need to take a deferment and create a interest capitalizing event. Your loans are already on pause at 0%. So, you know, I think that's just really important to know. There's a lot of terms that are similar being used right now, and we know that this can be confusing. So with that, I'll let Cody explain, you know, kind of the better longer term option.
Yeah, that's a great point. When we're talking about deferment, forbearance, income-driven repayment, and we're going to talk about public service loan forgiveness momentarily. These are all options that predated the COVID-19 pandemic and will also be available after COVID-19 related relief. So you're right, Natalia, payments for federal student loans are on pause until December 31st. That is separate than these programs that have existed for years and will continue to exist. So with that, you know, what are income-driven repayment plans? These are programs that are designed to make your monthly payments more affordable, and they do so by using a formula that will calculate your monthly payments based on your discretionary income and based on your family size. So instead of the total amount of student debt that you have, which is how your typical monthly payments would be figured out, this tends to use your size of your family and your income to try to address what may be a burdensome student debt monthly payment. So on this next slide, we're going to show you what are these programs. And I know I've been seeing a lot of people in the chat ask about particular programs. You've probably heard of at least a couple of these. So starting on the top, we have the newest program and the most generous programs. So there's the revised pay-as-you-earn program, there's the pay-as-you-earn program, and both of these are calculated as 10%, your monthly payments calculated as 10% of your discretionary income. And you can re-enroll in these programs for 20 or 25 years, depending on the program. And so you can have your monthly payments readjusted every year. And at the end of the 20 or 25 year time frame, whatever student debt that you have remaining is forgiven. Now, it's really important for people to note that if you have any remaining debt forgiven, it would be taxed as income that year. So that's another issue that some borrowers face. And it's important to note that you don't have to be in an income-driven repayment plan for 20 or 25 years. You can return back to your standard repayment at any time. You can actually go in and out of any of these programs at any time. And you can apply for these programs at any time as well. So if you just lost your job this week because of the COVID-19 pandemic, you can enroll in this program immediately. After pay-as-you-earn, we see there's 3 other programs. We have income-based repayment and the new income-based repayment program, and the oldest program, which is income contingent repayment. And as I mentioned, you can see that the oldest at the bottom calculates your monthly payment at a higher rate, and the time frame for completing the program is longer, and the programs were improved over time. One other important note, you see that revised pay-as-you-earn has an asterisk in the time frame. If you are someone who has a student loan for graduate studies, your max timeline would be 25 years in that program. For those who just have undergraduate studies, it would be 20. So it's just an important caveat for those that have higher degrees that you may not want that program because it is longer. You may want to explore pay-as-you-earn or one of the other programs. So these are the income-driven repayment plans that you all can enroll in at any time. Let's go to the next slide. Here's an example of what this looks like for a borrower. So for this example, we're talking about someone who's single, who has one child and whose student debt is $37,000. So under your 10-year standard, which would be your basic repayment right after you graduate and you enter repayment, that monthly payment would be $364 per month. Now you can see if you make $0 in income, your monthly payment in one of these programs could be as little as $0 per month. So that means that you could pay $0 per month, theoretically, for 20 or 25 years and keep your payments current. You're not falling behind on your loan, and you would have some student debt forgiven at the end of it. But you can see even at $25,000 in income, there's significant savings. At $50,000 in income, there are also significant savings, and even a little bit of savings at $75,000 in income. So, you know, these programs are extremely powerful. I know that I'm enrolled in one, and for me, it cuts my monthly payment in about half. So it allows me to, you know, pay my rent, put food on the table, and still stay current on my student loans. These programs are a little bit complicated, so that's why we brought on folks like Lindsay at Savvy, whose tool you can use to estimate what type of program you can enroll in and what your monthly payments would look like. So I encourage you again to visit that site. It's borrowers.buysavvy.com. So enrolling in these programs is really important. And not only is enrolling in it, but recertifying in these programs is really important. So how this works is, first, you would submit an application for an income-driven repayment plan. You know, we are always transparent. The application is accessible at the Department of Education's website. It's also accessible through your student loan servicing company. But there can be issues when it comes to submitting your application. That's exactly where that Savvy tool comes in, because they'll submit your application on your behalf and make sure that it's accepted, that it's received. So step one, you would submit an application. Within about 30 days or so, typically, you should be approved for your repayment plan. And starting then, you're now enrolled in an income-driven repayment plan. Now, where folks tend to have the most problems is that they can forget to recertify. Every year, you have to submit income verification that shows what your income was for the year, and your monthly payment will be adjusted accordingly. If you forget to recertify within the year, you can have your monthly payments increase because you're put back into the standard repayment. And if you had any interest accrued during that time, it can be capitalized, and which means it's added to your principal, so your loan balance will increase. So we always tell folks, when you apply for an IDR program, put it on the calendar. Make sure that you give yourself a month or two warning so you can make sure to submit your application within the 1-year timeline. And it's also, again, really important to note that you can recertify your income at any time. So again, if you recently were impacted by the COVID-19 pandemic and your income has been decreased, you can recertify your income and have your monthly payments adjusted at any time. So again, why are tools like the borrowers.buysavvy.com tool so important? That is because traditionally, student loan borrowers have fallen into what advocates have called the application abyss. That means that people will send their applications to the Department of Education or fill it out at their student loan servicer's website, and it will be stuck in review for months. And during that time, borrowers can see their interest accrue. Some can miss payments. There can be a lot of problems. Some of the obstacles that people tell us they face: they're rejected for minor paperwork issues. They receive poor communication from their loan servicer, so they're missing updates that are extremely important. And again, all of these things can mean that borrowers fail to recertify on time as well, which can be extremely costly. So we encourage people to stay on top of their applications, to use tools that help them apply in a way that's most effective and guaranteed, because you really don't want to fall into this application abyss. I even see here in the chat, Angel says that their IDR application's been denied 3 times in 8 weeks. Angel, I'm glad you're at least staying on top of it. These are the kind of issues that borrowers face. It can mean, months of interest accrued, obviously a lot of stress and financial obstacles as well. So we're going to just give you a quick checklist again to make sure you know what you need to know. If you want to enroll in a repayment plan, first you can visit the studentaid.gov website. That is the Department of Education's website, and that's where you can find information directly from the source. Also, you can contact your loan servicer for this information as well. Many of you have already told me in the chat that you are frustrated with your loan servicer. You're not alone. They should be your point of contact and they should be helping you enroll in these programs. But for years, their track record has been poor. And that's exactly why you can also visit, again, that website, borrowers.buysavvy.com, where you can use their tool to enroll in the program. It will follow up with you. It'll make sure that it's received by the Department of Education. It will hopefully provide the types of customer service that loan servicers should be providing, but are not. Step 3 and 4, those are the most important. Make sure to submit your application and make sure to reapply next year if you need to stay in the program. So that's income-driven repayment. I'm going to pass it to Lindsay Clark at Savvy to tell us about the federal loan forgiveness programs that are out there as well.
Great, thanks so much, Cody. And I can't emphasize enough, in working with your servicer or relying on, whatever that agent on the other end of the phone line is telling you. I did the same thing, and for years was never told that income-driven repayment plans exist. I always thought that because I couldn't make my payments that I had to go on to a deferment or forbearance. And so didn't even know that these programs existed until a couple of years ago. So I completely can relate to anyone who is finding out about these. But it's just another reason why these workshops are so important. But also at Savvy, first and foremost, we want to make sure that you as borrowers are aware of your options. That's sort of the first step. All right, so on to federal loan forgiveness. We are going to talk about one program primarily, which is Public Service Loan Forgiveness, or PSLF, as I'll refer to it in the coming slides. If you are a teacher, I would highly recommend you reach out to us in the chat box and let us know, because there is a specific forgiveness program for teachers called Teacher Loan Forgiveness. We're not going to go through it in detail on the workshop today, but if you're interested in receiving more information, just send us a ping in the chat and we'll be able to follow up with you and get you that information so that you can explore your eligibility with that program. So for any teachers K through 12, like I said, ping us in the chat and we'll be able to help you. As far as forgiveness goes, though, many people, it sounds very attractive, almost too good to be true. And many of these programs have been notoriously difficult to apply for, let alone achieve that forgiveness. One of the primary sort of aspects around forgiveness that many people overlook is the fact that it directly relates to your repayment as well. These things go hand in hand. So how you repay your loans and what repayment plan you're on is ultimately going to affect your forgiveness and how much you're eligible to be forgiven, as well as the requirements around those programs. So when we talk about forgiveness, we're really talking about sort of a combined benefit here. And we want to optimize your situation. And what that means from our perspective is minimizing your monthly payment. For most people, that's done by enrolling in an income-driven repayment plan in order to maximize your forgiveness, right? We want to keep that payment as low as possible every month. And that's okay that we're keeping it low and you might be accruing some interest, because we're ultimately setting you up and making sure you're on track to receive that forgiveness. So those things sort of go hand in hand, and often that's overlooked. So we just wanted to make sure that that was clear. So moving on to Public Service Loan Forgiveness. Here's the basic gist with this program. Essentially, it began in October of 2007, okay? And it allows borrowers who are in the public service sector, we're going to talk about exactly what sort of types of employment qualify, to be eligible to have the remainder of their loan balance forgiven tax-free after they've made 120 qualifying payments. Now, these 120 payments, do not need to be consecutive. They just need to be cumulative. I'm going to repeat that. They don't need to be consecutive, just cumulative. So you can take a break, or maybe you go on to a forbearance or deferment for a little bit, or you work out of the public sector and in the private. Your credits don't disappear, they just pause. You just need to reach that 120 total in order to be eligible for PSLF. So on the next slide, we're going to look at exactly what's involved and required to be eligible for this program. And this is where many borrowers, unfortunately, lost out on being able to take advantage of this because so many of the qualifications were unknown at the time. First and foremost, we need to make sure you have the right loan type. There's only one type of loan that is eligible for PSLF, and that is a direct federal loan, okay? A direct loan. So you must have a direct loan. Now, if you don't have a direct loan, let's say you have one of those older FFEL loans, and maybe your loan was from before 2010, like some of mine are, that loan can become eligible through consolidation. However, you would only start accumulating credits towards that 120 after the point of consolidation, meaning any payments or service that you had made on that loan up to that point would not count, unfortunately, towards that 120. You basically start back at zero. So the important point here being the earliest you can identify your loan type in this process, the better, because if you have a loan type that potentially would require that you take corrective action, you'd want to do that as early on as possible. So you're not sacrificing any months of working in service and payment that could be gained towards PSLF. So first and foremost, the right loan type, direct loan. Next, you want to make sure your employer qualifies. And we're going to talk about what exactly that means and what employment qualifies, but it's essentially all government employment, whether that's federal, state, local, or tribal, as well as not-for-profit 501c3s. All right, and so at Savvy, we have a tool sort of baked into the tool is a database of all of the eligible PSLF employers in the country. So you'll actually be able to see when you start typing in your employer if it is actually eligible for public service loan forgiveness. Next, you want to make sure you're on the right repayment plan. And the repayment plan that qualifies for PSLF is an income-driven repayment plan. It doesn't matter which income-driven repayment plan, and Cody just walked you through their different types of IDR plans. You just need to be on one type, doesn't matter which one, but that's going to allow you to take advantage of the PSLF program. Then, once you've sort of identified those three things, those three qualifications, direct loan, you're on an income-driven repayment plan, and you work for a qualifying employer, you're going to be able to submit what's called the employment certification form. This essentially is not a required form, but highly suggested by the Department of Ed that borrowers submit this every year in order to basically certify their past 12 months of credits. So that's credits that basically they made the payment on that loan, they were working for the right employer, and they had the other requirements around their loan type and repayment plan. And so it's suggested that borrowers submit this year over year, so that way there's no confusion when they reach that 120, that what their servicer says and what they think is actually the case. Many borrowers have run into this issue, where they basically went 10 years and then are going back and finding out something was wrong with their loans or the servicers made a mistake. And then after you've made that, 10 years worth of payments, 120, that's when you would submit the final PSLF application itself. All right, so that's essentially how the process works from any borrowers that are interested. Moving on to the next screen. This is a deeper look into exactly what qualifies for PSLF. So as far as loan types go, I mentioned direct loans. These are the types of direct loans that are eligible for PSLF. So it doesn't matter if they're subsidized or unsubsidized. It just matters that they are direct. As far as employers, I had mentioned 501c3 nonprofit and all levels of government. There are also other critical service areas that could be eligible. If you have a question about your employment, wondering if this is something you could take advantage of, ping us in the chat, or we're going to provide our Savvy support team information, and they will be able to help look into that and get you a definitive answer. And last but not least, repayment plans. So I mentioned income-driven repayment plans are the sort of eligible repayment plan for borrowers to be on. If you are on the 10-year standard repayment plan, one thing I want to make note of is that payment plan will have your loan paid off after 10 years. And after 10 years of payments, that's when you would be looking to achieve forgiveness. There would be nothing left to forgive. So potentially, if you have been on a standard plan, let's say for a couple of years, we could get those years to qualify as credits, but we'd want to move you on to an income-driven plan as quickly as possible. So you really need to be on that IDR plan in order to take advantage of PSLF. Now, what doesn't qualify for PSLF? This is what we're going to lay out in the next screen here. So the loans that don't qualify for PSLF are, as I mentioned, FFEL loans, that older loan type, Perkins loans, loans in default, and private student loans. Now, as I mentioned before, FFEL loans can become eligible through consolidation, and loans in default, if they are rehabilitated, once they are rehabilitated in good standing, can then become eligible once again. All right, so you're not sort of, you haven't permanently eliminated your options here. But as far as those private student loans go, unfortunately, they will never be eligible for PSLF. Now, I know this is a lot of information. I just saw Lisa in the chat mentioning that. Yes, and we've sort of set this all up because we're going to show you a tool in a couple of slides that's hopefully going to help make your lives a lot easier. But yes, we know that this is an overwhelming amount of information to take in. We don't expect you all to become experts overnight in student loans. You shouldn't have to be. That's why you have advocates like us. We're going to work on your behalf to make sure that you are able to take advantage of the programs you're eligible for. As far as employers go, those that do not qualify also include government contractors, labor unions, 501c4 nonprofits, and religious instruction. All right. And then repayment plans, we've got these lists right here: extended repayment, graduated repayment, extended graduated repayment, and if you were on a deferment during that time, or non-payments will not count as credit. So again, I know that this is a lot of information to take in. I'm about to show you in the Savvy tool how we're going to sort of simplify all of this for you and help you see clearly and straight through what you're going to be eligible for and what you can take advantage of. But it's just important to be able to make sure you're aware that there are things that do qualify and don't qualify. Moving on to the next slide. Great. So this is sort of a little checklist to keep in mind when looking at the PSLF program. So first and foremost, you can always visit studentaid.gov to learn more about these programs and see what you might be eligible for. You're going to want to verify if your employer qualifies and keep documentation around this. And this is what I had mentioned before with that employment certification form. So important as far as being able to ultimately make yourself eligible for PSLF. You're going to want to make sure that you're enrolled in a qualifying repayment plan. Again, this is something that Savvy can help you with a little bit later on. And you're going to want to continue working full-time in order to complete that 120 qualifying payments. All right. So I highly encourage you to visit borrowers.buysavvy.com to enlist Savvy's help if that's something you're interested in with this process. And we can go on from there. Great. So one of the things that I often am asked regarding whether or not this program might get eliminated, by the current administration, if any proposals were to go through. And actually, it's important for borrowers to know that we've made sort of progress in the opposite direction. A couple of years ago, Congress appropriated a fund of money to actually expand the PSLF program. It's called Temporary Expanded PSLF, or TEPSLF. And essentially, it is to help borrowers who were, for lack of a better term, screwed over by this process. I'm sure many of you might be familiar with the fact that, in 2007, this program started. In 2017, obviously about 10 years later, was the first year that borrowers could start applying, and they were rejected in waves. Less than 1% of applicants, were approved for PSLF. And so that was because borrowers didn't know that you needed to have a certain type of loan or be on a certain type of repayment plan. And so as more education about these programs continues, more and more borrowers are becoming aware and getting on the right track. However, this TEPSLF program was created to address a certain type of borrower who sort of, they felt lost out on this benefit when they should have received it. And that is a borrower who has made 120 payments, working for a qualifying institution. Okay, they work for a qualifying employer. They had direct loans, but they were not on the right repayment plan. Okay, so they meet all of the PSLF requirements basically, except for their repayment plan. If this is you or anyone you know, I highly encourage you to reach out to us for assistance, in navigating this application process, because it's a limited time fund. So when that money runs out, that's it, unless it's renewed. But essentially, in order to be eligible, you first need to apply for PSLF, get rejected, and then you can have your case escalated and reviewed for TEPSLF. I mean, it is, talk about backwards, yes. It's super, super complicated. Not sure why they did it that way. But that being said, because there are sort of all those steps and you need to get rejected first in order to be able to apply, if you have any questions or are interested, we highly encourage you to reach out. But if you are interested in doing this on your own, once you've been rejected from the program or your PSLF application has been denied, you can then send an email to tepslf@myfedloan.org, and that can basically escalate your case to be reviewed for this program. So again, complicated, yes, and we are happy to help any borrowers who are interested in pursuing that and might be eligible. Moving on to the next screen. Just a quick note on some of the other forgiveness sort of programs out there, particularly around cancellation and discharge. So these below that you see there are certain types of programs, whether it be you've been sort of totally or permanently disabled because of an accident, you have, or perhaps died, or a relative that died who has student loans, your school closed, things like this. There are certain stipulations and obviously requirements around these programs. So if you are interested or have a situation that you're curious about and wondering if it could qualify for potential cancellation and discharge, I highly encourage you to reach out to us. Go to studentaid.gov, but we are happy to help you explore what that might be and if you would be eligible. And then last point around the PSLF process, and I had mentioned this earlier on in the call, just want to make people aware of the student debt and relief scams that are out there, promising forgiveness. As you probably just saw, it is not an easy process. It is not a quick process. And there's no guarantee that anyone can make you right off the bat that you are definitely eligible and you are going to receive this. And that's sort of the first sign that something is a little off, when someone promises you forgiveness. So again, these are some of the things you want to keep an eye out for. That might include, like I said, immediate loan forgiveness or deadline approaching, things like that. We want to make sure that you are all aware and don't fall prey to these. Especially, it seems like there are more and more now that COVID has hit. People are taking advantage of borrowers in sort of unfortunate situations. So anything that promises you forgiveness up front or claims to the Department of Education, be very suspicious and wary. And if you have any questions about companies that you interact with, like I said, you can always consult us at Savvy or Student Debt Crisis or Next Gen, and we can help look into that for you. All right, so now that I've addressed it, and Cody and Samantha and Natalia and I have all sort of laid out this somewhat complicated, and like I said, I understand if it's overwhelming landscape around repayment and loan type and forgiveness. I want to talk to you about a tool that we've developed at Savvy completely for free to help you navigate this process, and really in whatever capacity you'd want to utilize it, hopefully can be of assistance going forward. So first, I'm going to talk about what Savvy is and who we are, how this tool can help, and then going to sort of walk you through exactly what that might look like. So on the next slide, if you want to follow along or go to the site with me while we're doing this, it's borrowers.bysavvy.com. And my colleagues, Ian, Spencer, and Itana will make sure that that's put into the chat box. But that's where you're going to be able to access this tool. And just a bit about Savvy first, before I continue on. Like I said, we are a social impact tech startup based in Washington, D.C., founded by advocates and policy experts, and we are all borrowers on this call ourselves. If it makes anyone else feel better, I have a little over $200,000 in student loan debt myself. So, we know what it is like to be struggling in debt. And if we go on to the next slide, it's going to show you some stats around, why we developed this tool and how it's helping people. But we work with teachers, social workers, public servants of all different types, and non-public servants, borrowers who are struggling to make their payments. Wherever you are on that repayment, sort of timeline or, sort of spectrum, whether you are maybe in default or wage garnishment, or maybe you're delinquent, or maybe you just don't know what's going on. That's often the case. I know it's often easier to not think about your student debt. I try not to, at least. Or maybe you are on top of things and think you're on the right repayment plan. Wherever you are, Savvy is able to help you. All right. So no one is sort of, beyond, repair or help. We can help any borrower who comes through, at least to answer a few questions and figure out what might be their best option going forward. And many times borrowers will see, an average of around $150 of savings or reduction in their payment each month by enrolling in an IDR that they didn't, know about before. So how does it work? Going on to the next screen, we essentially ask you questions around your tax filing status, your income, your employment. All of this is to help us identify the optimal repayment and forgiveness plan for you. And then you are able to select that plan, and then we take it a step further. We not only just show you what your options are and what might be the best one, but then we do the heavy lifting for you. We will actually digitally pre-fill these applications and submit them on your behalf, and then monitor that progress to make sure that when we submit an application, it achieves that desired outcome. It is accepted by your servicer for the right amount. Many times borrowers will do this on their own, and their applications will get rejected. The servicer will come back and maybe estimate a higher payment than they thought, or their credits, for PSLF might be way off, or they don't hear back at all, right? There's sort of three different scenarios that borrowers often fall in. This is where Savvy comes in to sort of be your advocate and make sure if the servicer is not doing things correctly, we are the first to correct that and to reach out on your behalf and work with you to make sure that you get what you deserve. So when going through the tool on the next slide, we are able to actually loans. We use a technology called Plaid, which if you have Venmo, our most financial technology apps, we'll use that to link your accounts. It allows us to see, sort of an accurate overview of your student loan situation, and we're able to show you a personalized repayment and potentially forgiveness plan if you're eligible. And then, like I said, we digitally enroll you into that program and make sure to monitor that progress so that your application is submitted and it's accepted by that servicer. And then last but not least, we offer one-on-one support with our student loan experts. These are people like myself, Itana, Spencer, Ian, and our whole team of experts at Savvy, who are all borrowers themselves. But whether it's just wanting some, 5 minutes worth of guidance around your situation from an unbiased third-party source that is just looking to provide you with, your best options, that's what you can expect from Savvy. So here's a quick look, if we go on to the next screen, at the front page of that tool. Again, like I said, it's no cost at all, absolutely free for everyone on this workshop here today. We start off by asking you two pretty basic questions around your income and your payment right now. And then, like I said, on the next screen, we're going to show you the loan sync area. You're able to actually identify your loan servicer. If we go on to that next screen. Your loan servicer, so what, in this case, maybe it's Navient. Enter in your username and password credentials, and it's going to sync over all of that data for us. And that, again, is going to allow us to see exactly what's going on with your student loan situation. If you're looking to become eligible for PSLF, for example, that's where we're going to be able to flag if you have an older type of loan that might require corrective action, like a cell loan. We'll be able to flag that for you and help you to take that corrective action going forward. And then on the next screen is a look at the sort of results page where we've identified the optimal repayment and forgiveness plan, potentially if you're eligible, for you as a borrower. So it's going to show you what that monthly payment could be lowered down to, how much savings per month you could expect, and if eligible, what your projected forgiveness might be. And it's also going to provide more information about these programs as well. Like I said, education first and foremost is our priority to make sure you as a borrower are informed, and when you're informed about your options, you're empowered. And that's the first step, I think, towards tackling student debt. And then this last page here shows the borrower dashboard. And this is where you're going to be able to see exactly where you are in the sort of process in working with Savvy. And hopefully, it's our goal to be as transparent as possible with you as a borrower. But this is how we really monitor your situation so that you know exactly what's going on. We know exactly what's going on. There's no secrets. And you can see, and understand, the sort of the timeline of events around these application processes. So it really helps to make you a more informed borrower as well. It's also where you can access our support team. So contact an expert. You see those 2 buttons there. That's where you're going to be able to click those and either chat with our support team, like you'll see in the on the next screen here. On the bottom right-hand corner of every screen in the tool, there's a green support button. You can click that and it'll allow you to either chat, or if they're not available on chat, you can send a direct message to our support team. They'll get back to you within 24 hours. Or you can call us. We have a direct phone line or email, partners@buysavvy.com. All right. So when going through this tool, if you have any questions or just questions in general, we are here as a resource and, hope that you will be able to utilize our whether it's our tool or our team of experts in whatever capacity is most helpful. So I hope that provided a little bit of clarity and hopefully some good news for those that were feeling a little overwhelmed. But onto the next screen, if there are any questions, we're now going to take those. And obviously you can find more information about all of this at bit.ly/borrower resources. You'll see that link on the screen right there. And yes, Amy, Savvy is free, completely free. Thanks to sort of the entities on this call right here. And we are providing all of this to you at no cost. So we hope that that's helpful. I will turn it back over to Cody and Natalia, and we'll take some questions.
Hey, Lindsay, thank you so much. I think I've got a list of questions from folks who put them in the Q&A box. So if you have a question, now's the time to add it as well. Submit it either in the Q&A box or also in the chat, where I see some folks are sending that through. And also, I know, Lindsay, we're running a little late, but we're going to stick around. So if anyone wants to go and use the Savvy tool and come back with a question, we will be here. So with that, let's go through some of the questions I've been flagging as interesting ones. This is something, Lindsay, I think is kind of fascinating. And tell me if you speak to a lot of borrowers that have this type of situation. But what about someone who owns their own business and their self-employment income fluctuates? How does that impact income-driven repayment plans?
Great question. The great thing about income-driven repayment plans is as that income fluctuates, so can your payment. And so, when and if that does throughout the year, it can fluctuate maybe, 3-4 times or however many, it does. You are able to resubmit that IDR application to have your payment immediately recalculated to basically take into account that new income. And what it does is it locks that payment in for 12 months. So, for example, if your payment starts, or if your income starts out at the beginning of the year at $50,000, that's when you submitted your application. And then a month later, it is dropped to, let's say, $30,000. You would want to resubmit to have it recalculated with sort of updated income documentation. And they would do that, and it would lock that new payment amount in for 12 months. And then if it even drops further, right, again, at any point, you could resubmit it again. And so we encourage borrowers to do this. Many borrowers are unaware that they have that opportunity. They think that once that payment amount is locked in, they either can make the payment or, they're basically stuck until the next year. So especially for someone who is self-employed and is very sort of, aware of their income, and if it does fluctuate, I would take advantage of that, especially if it reaches a point that is low, or, the lowest it might be, through the year. Submit that application and lock it in. Doesn't matter if it goes back up the next month, does not matter. You've locked in that payment for 12 months at that low income. And that, again, is sort of one of the benefits of this program.
Great. Thank you so much, Lindsay. I know just some related to that, Student Debt Crisis and Savvy performed a survey of 40,000 borrowers impacted by the COVID-19 crisis. And I think we were one of the only organizations that highlighted just how unique of a situation, unique circumstance, business owners with student loan debt who are impacted by the COVID-19 pandemic are facing. So I'm happy to hear that business owners are on the call and have their questions as well. Let's see here. Okay, this is questions from Greg. Greg was asking about the types of student loan forgiveness. This is something I know I've talked about on workshops for years, so I'll go ahead and answer Greg's question. Greg wanted to know, he is an older borrower, he's 77, he works as a professor at a college. His first question is there any kind of loan forgiveness for age or a statute of limitations kind of concept for student loans? And Greg, you know, that does not exist for federal student loan borrowers. We don't get into the details of private student loan laws that are state by state and local regulations. But there are sometimes some statute of limitations for private student loans. But for federal student loans, there is no way out from under them because of age or because of the amount of time you've been paying. But you did mention that you are a professor at a public university, so you would qualify likely for public service loan forgiveness. And if you've been working for a professor since October of 2007, any of that time that you were working for a public university would likely qualify for public service loan forgiveness. So I would encourage you to look into that. That is probably a great option for someone who's been a professor for many years.
Hey, yeah, and Cody, I just want to add one more thing to that was aside from employment, you know, the two other things that you just need to make sure of are your loan type, that you have direct loans or had direct loans, and that you are on an income-driven repayment plan. So sort of those three things in combination are what are going to be considered your qualifying payments. So, you know, basically from whatever point in time, you know, going back that you started, you had all three of those, that's when you can assume that you've been accumulating credits. Just wanted to clarify that, Cody.
Thank you. All three of those qualifications are so critical. Lindsay, since you were just on the line, this is probably another great question for you. Like anything income-driven repayment plan related, I think is right up your alley. But I got a lot of people asking, how does marriage and their tax filing with their spouse impact their income-driven repayment plan?
Yeah, great question. So it does impact it. It essentially looks at, first and foremost, your tax filing status. And if you are married filing jointly, unfortunately, it's going to look at your combined income. And I know, I mean, this is sort of, it's not ideal for many borrowers, and they, you know, they say, well, why is it looking at the combined income? These are my loans, and, you know, it should just be looking at my situation. But unfortunately, your tax filing status is sort of the centerpiece of this. So like I said, if you are married filing jointly, it's going to look at that combined income. If you are single, you file as a single person, it's just going to look at your income. Now, there's an option for borrowers who are married but filing separately. And we oftentimes have worked with people who, you know, married filing jointly, that income is a lot higher. But obviously, when it's just looking at that individual's income, it's a lot lower. And so they will actually consult a tax professional, and we encourage you to do this because we're not tax professionals, but to see, you know, about basically filing separately in future years. That way, they can just look at the individual income. So if you are married filing separately, they will treat you as basically a single borrower, and they will just look at your income. So something to just make you aware of, or make everyone aware of, that, you know, potentially you'd want to look into that. Like I said, you'd want to consult an expert and sort of weigh the benefits and disadvantages of that in regards to your situation, but that is available. The other thing to keep in mind here is that it takes into account dependents. And specifically, for every child dependent that you have, that's going to lower that monthly payment by about $50. All right. So we often joke at Savvy, they reward you for having children, but not necessarily for being married. That's what can sometimes hurt you, right? Because it's looking at the joint income. This even includes unborn child dependents. So if you are pregnant, you can submit that IDR application noting one unborn child dependent, and it's going to lower that payment by about $50. You know, we even had a case where a woman found out she was going to have twins, and we were actually able to resubmit her IDR application noting two unborn child dependents and lower it about $100. So these are some of the nuances around this program that, you know, I want you to be aware of, and Savvy can help make sure that you take advantage of. The last thing I would mention here is that as far as your income goes, there are two acceptable forms of documentation. that you can submit with your IDR application. The first is your most recent tax return, okay? And that's sort of the default one. When you submit this application through the Department of Education, they will often link automatically to the IRS website, right? Employer tax transcript. However, many borrowers are unaware that you can also submit a pay stub from the past 90 days. And in many cases, submitting a pay stub is actually going to be more advantageous or beneficial for a borrower than their tax return, specifically in cases where someone's income might have decreased slightly, but that might be the better representation of what your current income is. And in the past 90 days, let's say, you have a pay stub where maybe 1 week you're not working overtime and so it's lower. We can find that lowest pay stub, use that, and when we submit it, it essentially extrapolates your income from there, right? That's what they use to estimate your yearly income. So again, this is something that Savvy helps borrowers to identify which is going to be the best one. And by the best, I mean the one that's going to help make that payment the lowest. And sometimes it can be the tax return, but oftentimes it is the pay stub. And so this is another thing to just keep in mind, that you do have some options and you might want to be smart about which document you're attaching to support your income. Back to you, Cody.
Thank you so much, Lindsay. Let's see, what else do I have coming through here? All right, that was the tax filing. This is a question from Suresh that I'm happy to answer. This is so important, but many of you have probably heard of student or have thought about student loan refinancing. And Suresh says that they refinance their federal student loan into a company that is a private student loan lender, and they want to know if they can apply for these programs we've talked about. So what I want to be clear for everyone on the call is, if you have a federal student loan, the kind that you get from the Department of Education or that you fill out a FAFSA form for, there is not a federal refinancing option. That is something that advocates like us have fought for years, because there are people with federal student loans with very high interest rates, even though federal student loan interest rates have decreased. Now, what is offered for a federal student loan is the ability for you to refinance your loan into a private student loan. And that's a loan that you would get from some sort of bank or lending institution. When you get that private student loan, you now are no longer eligible for any of the federal repayment programs. That includes income-driven repayment, that includes default rehabilitation, and that includes public service loan forgiveness. At that point, your options are limited to what your private lender offers you. So this is something I just really want folks to be aware of, because if you make the choice to refinance into a private student loan, you may be forfeiting a lot of your rights. I did see other people in the chat who said they already had a private loan and asked if they should refinance. That's a different scenario. That you already have a private loan from a private lender. You're already working with their terms. So you may shop the lending market for a better product, kind of consider that like you would a mortgage or auto loan or something like that. Lindsay, another great IDR question. Someone wanted to know, what is the best plan for someone who works in an industry that may never recover due to the COVID-19 pandemic?
Yeah, I mean, that's a tough question. The IDR plans, are there to basically help, especially borrowers, whose incomes in relation to their debt, are going to be lower. And so, when you enroll on one of the IDRs, and it really, depending upon your disbursement date and loan type and things like that, that's really going to determine your eligibility around these programs. And one of the great things about the Savvy tool is that sort of the technology can help you to do that. But regardless, on an IDR, it essentially is going to extend that payment sort of life cycle out to about 20, 25 years. And so from my perspective, my advice here would be, getting on an IDR plan and making sure that you are recertifying yearly according to your income to keep that payment low. And then you sort of be on this for 20, 25 years. And at the end of that 20 to 25 years, technically any leftover balance is eligible to be forgiven under the IDR plan. The difference between that forgiveness and something like public service loan forgiveness is that PSLF forgiveness after those 10 years is tax-free, okay? Whereas IDR forgiveness after 20 to 25 years is considered taxable income. So you could potentially, depending upon how much is left over, be faced with sort of a tax bomb, as they would call it, but there really is no other sort of option out there. And so, I can totally relate to sort of feeling this way, but, again, I would try to take advantage of that IDR system to keep your payments as low as possible. If you try to go onto a deferment or forbearance and, keep using sort of those, crutches to delay the payments, basically pause them, it's just going to surge your interest. And, I don't know if anyone on this call can relate, like you can raise your hand on the Zoom if you can, but, if you've been paying on your loans for years and your balance has not only stayed the same, but gone up, I know mine has, it's probably almost doubled at this point, and that's because of capitalized interest. So staying on an IDR can help you to avoid that and keep those payments low, and it'll be for an extended period of time. But that I think would be the best option. Cody, I don't know if you have any other sort of advice there, but I think that's probably would be best.
Yeah, I think that covers it. All right, let's see. There's tons of great questions still coming through here. This question, I'm not sure I have an answer for. Lindsay, I'm curious to know if you've been facing this experience, but I had a question from a current student who says that they want to learn more about their options, for like income-driven repayment, like that, but they're telling us that their school's financial aid office is closed right now due to the COVID pandemic. Are you hearing that kind of information from current students?
You know what? I'm not, but that's interesting, and I'm sure that is the case for for many people, especially if you're not on campus and you're not able to access those same resources. Yes, I think it's made it even harder for student loan borrowers of all kinds, not only just students, but yeah, to get access to that information. So, I would say it's great that you attended this workshop. That is, everyone gives themselves a pat on the back for that, because really, attending something like this, no one wants to really to talk about their student loans. It's not a fun topic, right? And it's, you've been on here for over an hour, and so that really is the first step. It is just taking, sort of ownership and becoming as informed as you can. So you're on the right path. But we are happy at Savvy and Student Debt Crisis to help make sure that we provide you with any resources and information. And keep that's great for us to hear, because as advocates for you all and as borrowers, we would love to make sure that other students like yourself aren't facing this issue. And so if this is something we could potentially escalate or bring up, given our voice and our platform, that might be an important thing to for us to note, Cody. So that's I really appreciate that borrower reaching out and letting us know.
Yeah, it seems like no matter how many workshops we do, there's always situations that we haven't heard about before, or problems. In that case, I always encourage people to reach out to folks like Student Debt Crisis or the team at Savvy. We can reach out to other experts to try to get more information. And frankly, we can possibly empower you to take action to address issues that aren't very common as well. This question's from Megan. Megan's a current graduate student. She has not started paying back her student loans because she's still currently enrolled in school. And she wanted to know if she can enroll in a repayment plan now, even though she hasn't started repayment yet. Lindsay, do you have any advice for that?
Yeah, absolutely. We get this question all the time. So you absolutely can. The only thing that you would need to do, I'm assuming you're in an in-school deferment right now. The only thing that you would need to do is basically opt out of that deferment. So you'd have to actually do that manually by calling your servicer. And we at Savvy are happy to do that call with you. But that would be the first step. And then you'd be able to enroll in an income-driven repayment plan or whichever payment plan you'd like. And, if you want to start to do that, that obviously would help to lower the amount of interest, right, that you're accumulating during the course of that grad school. The one thing I would note, though, is that once you do opt out of that in-school deferment, you can't go back onto it for that year. So say you wanted to start making payments, but then turns out, you didn't have the funds, available, or, you had to stop and you wanted to, take advantage of in-school deferment, you wouldn't be able to until the next school year. So just something to keep in mind when you do make that decision, but you absolutely can start that repayment.
All right. I see some more questions coming through the live chat here. Let's see here, some good ones. This question I think I can answer as an advocate. Nicole asked if we expect there to be an extension to the pause in payments and interest due to COVID-19. She brings that up in reference to a possible second wave of COVID-19 cases. Nicole, as an advocate, I would say we cannot guarantee that. I think we were happy to see that political leaders were taking the crisis of student debt and considering relief for student loan borrowers amongst all of this. Now in over 6 months of relief, and there are other parts of the economy and other people and businesses that also need relief. So we cannot guarantee that. I can tell you, though, that we spend every day talking with other advocates and talking to policy leaders about how to make sure that relief is not only extended, but expanded to include people who haven't even received relief yet. So, stay tuned, but I know that's on a lot of people's minds. And another just topic I see folks have been chatting about and asking in the Q&A box is about bankruptcy. We don't get into bankruptcy in these workshops because the topic is more complicated. You are probably aware that for years, bankruptcy was so it was almost impossible. We have seen some great progress in recent years, and that is becoming easier to accomplish. If you feel like that is your last resort, I would encourage you to reach out to an expert student loan attorney.
Cody might be cutting in and out a little bit there, but I think he was on the right track to saying that contacting a student loan attorney would be the best advice, or your best option from this point to get sort of the most accurate and sort of expertise around this area. Okay, let's see if there are other questions. I'm going to call on my colleagues. I really want to give a huge shout out to the Savvy team in the chat right now that have been in the chat, Ian, Itana, and Spencer, who have been interacting with all of you and answering your questions. They are truly what makes Savvy, what it is, and are the backbone of our advocacy work and all of the stuff that we do. So just want to say a huge thank you to them and Dylan and Samantha as well on the presentation. But if there are any questions, maybe Ian, Spencer, Itana, that you want to sort of throw my way that you think would be helpful to answer live, let me know.
Hey, Lindsay, this is Dylan.
Hey, Don.
I see a question from Maria Einsig. What other help is available for those who do not qualify for the loan forgiveness? I wonder if we wanted to perhaps mention disability discharge for anybody whose circumstances apply for that.
Yeah, so the best, my advice there would be there are a couple other different around disability, around perhaps if you have sort of Perkins loan for teacher cancellation. We have, depending upon if your school closed or if your, sort of diploma was made invalid or ineligible. I would recommend going to the studentaid.gov website to look into sort of the full list of cancellation and discharge programs. like I said, there are more nuances and details in those. I wouldn't want to give you any sort of false, advice here. So that would be my best bet.
Awesome. Then we get another one from Anna Fernandez here. Is there a site for student loan attorneys, or for people who would want to seek further help? What would you recommend?
Oh, that's a great question. I think from our perspective, we work with the Student Loan Borrower Protection Center, and that might be the best place to access attorneys or advice around this. I will have someone from the team post that link in the chat box. That way you can look there. But that's sort of an entity that Student Debt Crisis and Savvy NextGen all work with that help to protect borrowers via the legal system. So we will put that link in the chat box so that you can pursue that.
Awesome. Yeah, I see Ian has put that in at protectborrowers.org. It's a great resource. Let's see. Well, I definitely encourage people to continue posting their questions here in the Zoom chat and the question and answer. I see one, let's see, from Alton Jones. If one of our income decreases, and I think this was in regards to being a married couple, should we both seek income reduction student loan payments?
So this is a great question. Yes, you should, especially if you are utilizing an income-driven repayment plan or looking to, and you are married filing jointly. It's looking at both of your incomes, right, as joints with respect to both applications. So if there's a decrease in one of your incomes, there's a decrease in both of yours. So absolutely, you should.
Excellent.
Let's see. I'm also looking through the chat here. It's so great to see so many borrowers online and so many of you still on the call. One of the things I wanted to mention was for borrowers who are not able to, or who have loan types that have not been eligible for the CARES Act relief. I'm not sure how many of you are out there. We estimate about 9 million borrowers, as Natalia said earlier. Particularly those that have these older loan types. I have some of these. In fact, I have 2 FFEL loans, one that is federally held and owned by the Department of Education and qualifies for the CARES Act, and one that happens to not be. They're actually from the same school in the same semester, so go figure, right? But I just wanted to make it known that if you do have a loan type that doesn't qualify and you are in need of relief, I would highly encourage you to reach out to your servicer or lender directly. They are being very lenient right now in offering forbearances and sort of extensions that they normally wouldn't offer. So I've taken advantage of this. I have FFEL and private loans through Navient in addition to my federal, and I encourage you to do so if you are in this situation and in need of relief. And we at Savvy are happy to also make that phone call with you to make sure that you're exploring any of your options fully.
I see a question that came in from Jennifer Carpenter here. Thanks for answering my questions. Savvy looks like a great tool, but what would you share about your customers and with whom? I would like to use the tool, but I don't know your confidentiality policy.
Sure, that's a great question. And so we can provide a link to our sort of privacy policy, from our website, but we don't share any confidential information about our borrowers and users. The only information that we look to share is on an aggregate level, and that's basically to show things like average savings across our users. But absolutely no personal information is shared with another entity. And in fact, just so you all know a little bit more about us and our credibility, we partner with organizations like NEA, the big teachers union, SEIU, the big service workers union, TIAA, Retirement Services, AIG. These are all huge entities and corporations and/or unions and nonprofits that have fully vetted Savvy and work with Savvy and trust Savvy to help their employees, their members. And so, this sort of speaks to our credibility in this space, just for some added context there. But I'm happy. I'll have Ian, provide our privacy policy in the chat box. And, I think it's totally fair and sort of right to be concerned about any, entity in which you are, potentially sharing your, your information. So happy that you asked that. And, we're always happy to answer any other questions or provide, sort of more context and detail around that. But hopefully that was helpful.
I'm seeing a couple of folks asking about, where can we see this recording after this presentation? And I want to just let everybody know that you can find a recording of our previous clinic at the resource center at bit.ly/borrower resources. And you can also see a copy of this live stream at the Student Debt Crisis YouTube channel. Just go on YouTube and search up Student Debt Crisis. I can also post the link to that channel in the chat here. But these will be available. You don't, if you want to go back and review, you will have that option. So just want to let everybody know that. Let's see, I think we maybe have time for one more question here. Let's see.
Dylan, I saw a good one to come through from Heather, if I can take this one, and
Go for it.
you can maybe pose another one after this. I saw Heather ask about if she makes sort of any payments in addition to her monthly payment in order to get that 120 credits right towards PSLF. Basically, can she double up on payments to get double the credits? Unfortunately, the answer is no. You only can get one credit per month. So it is going to take you it is going to be 10 years worth of payments that you're going to have to make in order to achieve that forgiveness. So just wanted to clarify that.
Awesome. Well, I think with that, we're probably going to go ahead and wrap things up here. I want to thank everybody for attending and for listening. Hope this was helpful. Just as a reminder, you can visit our Student Loan Borrower Resource Center, where we've got a recording of this clinic, the Savvy Student Loan Aid Tool, a number of other resources. And as well, if you found this helpful, we'd really like to hear your feedback. We have a borrower feedback survey at the Resource Center. And if anybody here, whether you found it helpful or actually, especially if you didn't find it helpful, if you feel like there's some way we can improve this clinic or any of our other resources, we really want to know. And people, submitting these surveys helps us make our resources better and helps us get, borrower relief for folks like you. So with that, last things you wanted to add, Lindsay, or anybody else on the call?
No, I was just going to say, again, this is the sort of pat yourselves in the back for making it here today, and really appreciate everyone staying on. We hope it was helpful and informative. Always appreciate the feedback because, this is something that we're going to continue doing. So continue looking out for these going forward. And hit us up on Twitter, on social media. And, I think it's always better when borrowers start talking, it's always helpful. And when they reach out and interact with us. So, again, we're really glad that we can help so many of you. And we look forward to working with you in the future.
Excellent. All right. Thanks again, everybody, and have a great day.